Hey traders, Raghee here. Happy Thursday, everybody. Welcome to another episode of Charts and Coffee with the special daylight savings lighting. Yep, this time of year, I am just inundated in my office here. It's gorgeous, but it makes for some weird lighting. So hopefully this will all pass pretty soon. Great to see you all. Great to have you here for in our Charts and Coffee crew. So as always, just a little breakdown of what we have to kick off the morning. We are in this post-Powell environment. One of the things that I warned our members, and we talked about this, and this is just any Powell environment, Jerome Powell really set the market aflame yesterday by mentioning that they're in no rush to even discuss a taper. So you take taper tantrums off the list. They were very optimistic about GDP, which actually, even though the equity markets are down a little bit, which actually does bode pretty well for us shifting into the next phase of the macroeconomic cycle, if you will, of increasing inflation, which we have, and increasing GDP. So when you add that to the very easy monetary policy and the very generous printing, you've got really one of the two extremely ideal scenarios for higher equities, for that trend to continue. But let's also remember, and this is a kind of a mistake a lot of traders will make. It's just a matter of experience and seeing these types of events. Is yesterday's move created a lot of momentum, and you don't want to get suckered into that. Again, you're going to see a lot of momentum plays, certain levels of resistance that are breached. And, the market just reels those in, and you're going to see a lot of those get crushed today. The day after is oftentimes going to be giving you a better opportunity to scoop in those names that you liked so much yesterday. So keep that in mind. Be opportunistic, right? So even your defense should be offensive. So with that being said, welcome. Let's kick it off with our first question here. And Alec asks, sitting mostly in cash, that's cool. Trading very lightly, also very cool, until NDX resumes a nice bullish trend. Should I feel guilty? I love the question, Alex. Alex, so keep this in mind. What do we look at here in Charts and Coffee? What do I look at when I break down indices in the futures room? What is the touchstone of what I do in the Sector Secrets Mastery? I'm going to show you guys that right now. So keep this in mind. Index, sector, stock. Pretty simple, right? I wish it rhymed. That would make it even better. Index, sector, stock. So let's start at the index level. You mentioned the NDX. I'm going to go right to the NASDAQ futures. What is inside the NAS? And the NAS is choppy. Tech wreck right now. It's just a mess. It's a hot mess. This thing's been a dumpster fire. But, a lot of traders might look at the NAS through the QQQ. 6 of one, half dozen the other, gang. Same narrative. However, let's go from the index level to the sector level. Well, here's the punchline. Communications have been absolutely, what tech wreck, right? They're blissfully ignorant of what's been happening in the broader tech narrative. This is Facebook. This is Google. In fact, let me show you what XLC is, because a lot of traders are looking at XLC names and they're not quite. And the reason I mention this is if you understand the power of the XLC right now, you understand the power of these particular stocks. If you're looking at Facebook, Google, Twitter, Comcast, Disney, Viacom, just go down the list. Then go over to the chart and make sure it's participating with the broader strength of that sector. This is where the NAS has a little glimmer of hope. This is where there's clearly a bullish structure, okay? So the reason I bring that up is there's been talk of XLC names, and if those traders understand why it's working, they step back, index sector stock, they'll realize that there's plenty to like. It's just in a very small corner of what's happening in the NAS. Consumer discretionary, XLK, Apple, Microsoft, right? Let me show you the XLK, just to contrast with the XLC. So if XLC is Facebook, Google, XLK is Apple, Microsoft. Do I want any piece of this? No. right? That's the touchstone of what we look at. And then look, let me also mention, Alex, and don't feel guilty. It's really interesting. Uh, the markets are going to have other uptrends. The markets are going to give us plenty of opportunity. There will be opportunity, and it's just right now happening in the non-correlated index names. I'm not focusing on names correlated to the indices right now. Yeah, not at all. Hey there, Donald. Looks like the post-Powell hangover. Yeah, probably. But I think this is going to set up some interesting opportunities. So the macro tectonic plates are already moving, right? The Federal Reserve has already got those moving. And so now it's just a matter of pinpointing where we are in that macroeconomic stage. Remember the 4 pillars of macro: inflation, GDP, money supply, monetary policy. We know where the Fed is pointing where we're heading, right? The Fed's the one who directs it, right? They're the ones at the helm of the printing press. So I don't want to argue with the Fed. If the Fed says go that way, that's what I'm going to do. But I'm going to be a little bit more discerning, to your point. Where are we not going to see the hangover? There's a lot of reflationary names that are doing really well. Energies will continue to do well. Financials will continue to do well. So there's definitely places we can look for opportunity. And yes, absolutely, I agree with you. Moving on over to triple witching. It's a I get this question, Maruf, quite a bit. I don't pin. There's nothing wrong with it, but I don't do that. I look at it as a volatility event. That's it. What is triple or quad? What are the witchings? It's one of the 5 cautions. It's going to be where we get a lot more volatility. Look for where the open interest is on the options chain. Those are your gravitational pulls. Those are your magnets. So look for where the size is at. Think always of where the losers are, where the winners are. Volume is another way to do it. Open interest is another way to look at participation and volume. So I just look at it as a day of volatility, as I would look at yesterday. It's a day of volatility. In and of itself, the day is not a strategy. The day is just a volatility. So that's the way I look at it every single month. All right, WSM is through the roof. William Sonoma, thank you so much. When do we close the position? Well, we have, and don't thank me, Christian. Look, unless I'm the one helping you push the button, you took the trade, and kudos to you. But look at this swing high here around 140. I would scale out. I would be proactive. And the reason that first profit target, we talk about this a lot in Sector Secrets. There's a lot of traders out there who are excellent, sometimes far better than I am at finding entry zones. But the thing that I'm really good at, if I could toot my horn for a minute, is exits. I don't get greedy about exits. And why is that first target so important? Because the first target allows us to turn the trade into a winner. When it's a winner, we know, fortune cookie wisdom says, don't let it turn into a loser. Scale out, move the stop to break even. Your first profit target is probably the most important leg of your transitioning from managing risk, like you do at the onset of the trade, to managing now the winning trade. And so I think a lot of traders make their first target way too ambitious. They put it way out in the stratosphere. They sit with an unrealized winner for way too long. And then by not scaling out, they're not able to pay ourselves. And that's job number 1. I know people say managing risk is job number 1. I don't believe so. I don't pop out of bed at 4:30 in the morning going, yay, I get to manage risk. I know that sounds responsible. The truth of the matter is I hop out of bed because I'm a treasure hunter looking for that next trade. But part of doing my job, which is paying myself, is also protecting. So to me, pay myself, move the stop to break even. It's almost one motion, right? It's not 2 separate things. So when do we close the position? Don't close it. Scale out. If you believe this is a good trend, it's not my favorite, but if you believe it's a good trend, keep an eye on it, Christian. Nice trade. Scale out. Pay yourself while you can, not when you have to. And then let's see if we can make it towards 150 to 153 as that second profit target. So thank you for the question. All right. Next up is pins. Hey there, Webuilt. All right, pins. Pins is a choppy market. Again, really important to point out that the yellow chop was preceded by a double green. That means that even in the chop, I am bullish. I'm looking for oversold buys. I'm not looking to short this market. Eliminate one side of the trade from consideration. Swing trading, day trading, whatever it is, eliminate one side of the trade from consideration, and you're going to find a lot more clarity. Remember, this is the way I look at it, right? The Latin root of decision is, I think, desir. And if you really look at what the word decision or decide means, it's to cut off, So the process of deciding is to eliminate, right? Eliminate one side of the trade. You're going to find, I think, a whole lot more accuracy and clarity. And it's funny. It just inherently gives you a lot more confidence. So I'll for sure, if you're looking long, you're going to position yourself in the path of least resistance. So love it. Good stuff. And yes, if you want to check out the mastery, you can do so at simplertrading.com/sector. And by the way, our live trading, where we go 1:30 to 4, rebuild watch list, do some live trading, take tons of Q&A. That's this coming Monday. So stoked for that. Next up, with yields going up, do I think the SPX can bounce back or continue to drift lower? Oh gosh, yeah. The SPX, that's, whether you're looking at SPY, SPX, ES, it's all the same thing, different flavors. So do I think the S&P is, generally speaking, going to keep moving higher? Yes. I'm not going to mince my words. Absolutely. Is it going to keep punching up to higher highs in the way the market did last, say, summer, or even the way the market did, say, December to February? No, we're not going to have these kinds of markets all the time. But I do think, generally speaking, the path of least resistance is absolutely higher. There's nothing in what I saw the Fed talk about that doesn't suggest they are going to continue to support the stock market with their policies. Think of it this way. By keeping the longer end of the yield down, what have they encouraged? Spending, homes, auto, projects. And by keeping yields down, they've discouraged savings. I remember back in 1984, 6 and 7, my mom bought CDs. They used to be full-page ads in our paper on CDs, certificate of deposits, and they would yield really good returns because the interest rates were higher. When's the last time you heard anybody talking about a CD, right? Where do you go for returns? Where do you go forget alpha? Where do you go for returns? If you need to put your money somewhere, where do you go? The carry trade in currencies has been crushed because all the central banks have low rates. So the contrast, the chasm between a low rate and a slightly high rate, like there used to be between, say, the Japanese yen and the Australian dollar, or the Japanese yen and the New Zealand dollar, all of those have really just imploded. Where do you go for returns? If you're not playing SPACs, you go into the equity markets. So really, if you think about it, the Federal Reserve, by way of their policy, has just sort of siphoned us all into, we've got to be in stonks. And so, where else are we going to go? Whenever you think about where is the market going to go, think about where else could it go. Sector rotation is a more granular discussion of that. But I don't know that there's another asset class that right now is going to make a whole lot of sense. That's going to compete broadly with equities. All right. So thank you for the question. Hey there, Michael. How does my course differ? Totally different traders. Yeah, we're just totally different traders. Two different trading styles, whether that be John, Danielle, TG, Allison, whomever. Yeah, they're just different trading styles. At the end of the day, it's like martial arts, right? If you're a UFC fan out there, it's always styles, right? We're all studying martial arts. If you're in the octagon, some sort of martial art, Muay Thai, Jiu-Jitsu, Kempo, whatever, right? Muay Thai would be, I love Muay Thai, but you're looking at different styles. So I think that all of us here at Simpler, we have a style. And if you're looking at John's style versus my style versus Henry's style, you're going to see nuances. And so you then get your opportunity to look at whomever and say, okay, does that resonate with me? Is that style? Forget whether or not the trader was incredibly productive last year. Everybody was last year, gang. Think about how they entered the market, not whether they made money or not. I mean, clearly that's somewhat important, but think about how they made money, the process, the tools, the mindset. And then that's really the decision maker there. Michael, I hope that makes sense. Okay. I hope that makes sense. In another significant chat room I'm in, an experienced trader said it looks like the market is going to try to force the Fed to institute YCC and the Eurobonds are not done. What's the trade, right? Again, it's hard to comment on other traders' analysis, right? That's why I stay in my lane. What's the trade? So if you do, so let's go back to that styles question. If you do subscribe to that, if you think that is something that makes sense to you, here's what I'll say. Where's the trade? Here, when I talk about a reflation trade, when I talk about macro, we're not having a cocktail party discussion. We're not sitting around, exchanging ideas at the water cooler. I'm going to say, all right, this is the macro. This is where the focus is. This is the sector. These stocks where the focus is. So what I would say is, where's the trade? Look at that. Make sure there's some technical and structural confirmation that there is actually that idea being factored in, being discounted into that market. And that's what I would recommend you do, not just for whomever is giving you that advice, but anybody, including myself. All right. Do I still want to be in copper? Keith, how do I put this? Hell yes. I do. It's having a little bit of a stall here, but that's okay with me. I still like the copper trade. I still like platinum. Silver and gold, not so much, although that might change. We'll see what kind of response we're seeing post Fed. Now, remember, I'm talking about a time horizon, mostly when we're here in the room in Charts and Coffee. I'm talking about a time horizon of 2-3 days to 2 or 3 weeks. Silver and gold or utilities or staples, if we were doing capital in coffee and not charts in coffee, when I'm rebuilding a portfolio where the time horizon is usually a minimum of 6 months, really somewhere between 3 and 7 years, I'm actually going where everyone's not going, right? I don't rebuild a portfolio by chasing parabolic markets. So silver and gold is a different time horizon, and I have positions in silver and gold, but they've got a completely different time horizon. But as a trader, absolutely, my friend, platinum, copper, you bet. We've got an indirect play right now in the Sector Secrets room on uranium. So yeah, there's a lot of metals that I like very, very much, and yeah, absolutely. You don't have to play the futures contract. You can play the stocks or the ETFs that are tethered to that narrative. So, we've got those open positions right now. So, all my cards on the table. All right, next up is DXY. Yeah, I was looking at bonds this morning. We're going to do a little bit of that when we go into the futures room to do some day trading this morning. Talk about different time horizons, right? So, yeah, I think that the dollar definitely sold off yesterday pretty hard because the printing press is right back on. But take a look. I figured it's going to be choppy. And what we talked about is it's very likely to be choppy. Here's your down move on the dollar. Here's the flip side of that. Okay, we're not out of the woods. It's not going to be clear sailing, which is why I mentioned that, getting suckered into long positions on the momentum that the Federal Reserve created post 2 o'clock, tricky situation. The market's gotta let the dust settle for a moment, let the market find its traction again. Or you focus on things that the Federal Reserve has already got the wheels in motion on. Reflation. I hope that you're sick of me saying reflation. That is the trade that's going to continue to work because macroeconomically, that's where we are. There's a certain inevitability to the way in which these macro pillars are sitting right now where certain markets are going to benefit. I don't believe right now we can play broader narratives. We've got to get very granular. We've got to be respecting where the macro is indicating that there's more flow. So yeah, I fully anticipate the dollar to be very, very choppy and even the equity markets for a little while, as the market determines if they actually believe Powell. They know what he wants to do. They know what he's saying. So now it's whether they believe him and whether he will be able to do it. Because I think the bond market is still saying, yeah, Powell, we get it. You've got the printing press, but we don't believe you've got a grip on the longer end of the yield curve. Do they end up going Operation Twist? We'll see. I'm not ruling that out. That's the easiest way for them to bring the shorter end of the yield curve higher percentage, bring that yield up, and keep the longer end of the yield curve down. And that's ultimately what they want. So, and that's what bonds are saying. They're telling Powell, you are delusional when you're thinking that the inflation is in check, that you guys keep telling us that you're willing to let the economy run too hot. The bond market is saying you're going to lose control of this. You know, you're running at red line and you're thinking that you've got it under control. See who wins. All right, gang. So with that being said, thanks as always for being part of our Charts and Coffee crew. Follow the trends, gang. That's your higher margin for error. That's your path of least resistance. Follow the trends. I'll see you tomorrow. Be good to each other.